it's not just a rare asset, it's a rare asset with network effects. Okay, we haven't seen any of these before. This is why it keeps confounding people in how it moves. Network effect rare assets never existed before. Well, you can trade a cycle, and that's okay. That doesn't mean you've cheated on your girlfriend. It's you can trade a cycle. If you want the dirty truth, you should never own Bitcoin. The actual truth is you should own alts or stablecoins, because when Bitcoin outperforms, it's generally when the markets are falling, and in which case you shouldn't own Bitcoin. You should just own stablecoins. And when the markets are in a bull run, generally the alts outperform, particularly the large alts, so like Ethereum, and therefore at that point you should own those, and maybe you should never own Bitcoin. Now, that's the extremity of the whole thing. So my view on this is, I think the space goes, the market cap of the space goes up 100x from here over the next 10 years. So call it from 2 trillion to 200 trillion. I mean, that's ludicrous. We've never been faced with an asset class that does that in all recorded history in a period of time like this. So the cycles are going to be important occasionally, because you don't really want to sit for 2 years not making money. You might be able to make money in other stuff. But, you know, generally speaking, you want to keep some into it. And, you know, some people will keep all into it. I won't. I will take some off the table and do other stuff. And I will then look for the time to get back in again when I think it's going on its next move. Now, maybe we've eliminated the cycles altogether now, and that it's smoother and it trades sideways for 2 years. That's possible too. I don't really have a view, but I won't be 100% my net worth the entire cycle. that you know, that doesn't make 100% sense to me.
Yeah, but would you be 20?
Oh yeah. And knowing that 20 could go down to 8 because of, you know, the market's I have no issue with that whatsoever.
What is your take on, at this point in either the cycle or just in the general life of crypto, on its correlation between other markets?
I don't think it's correlated at all. I think the only correlation, occasionally, there's passing correlations, but they don't last. The correlation generally is central bank printing tends to rise all asset prices. So of course that features in Bitcoin's price, as it does in gold and equities and real estate and art and all these other things. So that's probably one of the larger drivers, but it's not correlated. Why? Because it's a network effect asset. It's different. Well, I own less Bitcoin and more Ethereum. So basically still 100% of my liquid net worth is in crypto. And I know everybody always asks the split. It's currently 55% Ethereum, which is going up every day because Ethereum's outperforming, which I know some people don't like to hear. 25% Bitcoin, and a kind of tail of an equally weighted basket of other protocols and tokens, plus a bit more of a concentrated bet in community tokens. Firstly, I saw the vitriol of the Bitcoin community when I, in October, started saying the ETH chart looks pretty interesting and ETH Bitcoin chart looks interesting. People were angry. They hunted me down online, you know, and I was like, that always makes me, if somebody says I'm an idiot for looking at something, it makes me want to look at it. So I started doing work on it. And the assumption was from the Bitcoin community was Bitcoin was special. It was the only one, and it was driven by store of value, and everything else was a shitcoin. So then I started looking into Metcalfe's law, and I realized that Bitcoin and Ethereum were priced off exactly the same mechanism, as were all of these tokens. And that it wasn't special Bitcoin in how it was priced. It was basically the number of users. And, you know, yes, Metcalfe's law is the number of users and basically the interconnection between those users. And I looked at that and went, oh my God, well, Ethereum's just launched DeFi and NFTs and all of this stuff. So there's a lot more activity going on the chain than there was on Bitcoin. And that made me start to pay attention. Then the chart started breaking out. And then I realized that the breadth of what was happening, the speed of the growth of the network in Ethereum was twice as fast as Bitcoin. So it was likely to grow twice as fast as Bitcoin in price. Simple as that. Yeah, the 80-20 rule. I mean, this is like the dot-com boom. How many survived? Not that many. But, you know, yes, it's okay to play with these small ones, but you need to know what you're doing, or just take a very small position and realize that you're hugely speculative. You're trading penny stocks and they can go bust at any time. Or you can build a proper portfolio and think about risk management and understand that not all of them will work as well as you want, but you're going to only get involved in the top 30 or 40 coins. And then you may take an individual bet because you particularly like Audius or something like that. That's okay. But, don't go looking for penny stocks to try and get rich, because it's proven that virtually nobody ever gets rich from penny stocks. Generally, they end up in prison or broke. Well, they can never catch up in assets. So buying an asset is saving for future consumption later. And you want the asset to go up over time, and then you can consume more. So you buy a house, and then you hope to sell it when you retire. And you hope it's gone up more than the cost of living. That's why we have assets. So the problem is that wages aren't affected by this monetary printing. All the variable stuff like corporate earnings and wages don't change. They move a bit by the rate of CPI inflation because a lot of them are referenced to it, but they don't change. But the cost of assets keeps going up. So your future self is getting poorer because you can't afford them. So what you're doing is destroying future wealth, future consumption. Now, why crypto has been so important that I've been pounding the table over is because it's fractionalized. You can have 10% of your net worth in Bitcoin, and I can, and Mark Cuban can, and we're all on an equal footing, right? That is the game changer here. And so it gives people a chance to not get left behind.
Right, because when it comes to stocks, and someone may say, Amazon, company of the future, going to be the greatest asset you could ever own. I don't have $3,500 to buy a share. I want to put $30 in a month.
Or do you want to buy one share of Amazon? No, I want to buy a basket of shares, but I don't want to have the whole S&P. I want to have these stocks. Well, suddenly I need 25 grand. Well, I don't have 25. It's like, we've got to help people more, and we're just not. And Wall Street is so busy pushing back against change. If it just stepped back and said, what do people need? It would change its view on everything. So would the regulators. All of this accredited investor stuff is nonsense.
Oh,
you're allowed to go to Vegas, do whatever the fuck you want, but you're not allowed to invest in a security or a startup. I mean,
your friend's company.
Yeah. Are you insane? Who are you helping here? You're helping Wall Street because they can pull their money for you, and then you can invest.